Now we are coming to the next topic, that is importance of locations in trading. Locations are one of the important area in trading. Just like in real estate, how location decides the property prices, in trading also location is most important. If you know in real estate, you know that property prices always depends on where is that property location, right? Location is most important in real estate. That is how your property prices will be decided. Property at the right location, good location always have a better market value. Trading also same thing. Trading also location is very important. Okay, location. In trading you should know right location where you have to enter. That is very important. That is what I said in the beginning also. Value area. What is value area? Value area is nothing but location. Right location, nothing but it is also known as value area in swing trading. That is what I'm going to show you in the second session about the value area, about the right location where you have to enter in swing trading. Buying or selling at the right location can help in reducing the risk and getting good rewards. One of the big mistakes swing traders, people who are new to swing trading, they mistake what they do is they just enter randomly in swing trading without even looking at the location, without even looking at the right value area. They just enter wherever they see market is going up or going down. That is the mistake they do it. So if you want to become a good swing trader, then you should enter only at the right location, only enter at the value area. And as I said from the beginning also, since it's a swing trading course where you have option to trade in so many hundreds of stocks, right? F&O only I said more than 150, 160 stocks available. So many stocks are available for trading, right? So you don't have to really worry about not finding that stocks at the right location. Only thing is that you need to spend time. You need to give your time in scanning those stocks which are at the right location, which are at the value area, then only take the trade. Other trades which you think it is not at the value area, not at the right location, just skip it. You don't have to have any emotional attachment towards any stock that I want to trade only these stocks. There are so many options. Okay, so that is why you should always remember, if you take the entry at the right location, it can help you in reducing risk and getting good rewards. What I mean by that, you see that some stocks in the strong uptrend, okay, it's in the strong uptrend and you want to enter long, but entering long here will not give you good risk reward. It will not give you good reward because you are entering at the top. Where you should enter here at the pullback, value area, location. This is the best place. Okay, don't enter at the top, enter on the pullback. But how to know this pullback? Here you have to enter. For that you need to use some tools, right? How to know that is the best location? That is what I'm going to discuss in the second session. But just remember, I'm not saying that by entering here 100% it will go up, right? There is no 100% in trading. Anything can happen in trading. But only thing is that if you enter here at this location, your stop loss will be smaller. Mean you can keep stop loss below that value area, so your stop loss will be small. But if you enter here, look at this, your stop loss will be very big. That is what you should always remember in trading. Always enter at the right location so that your risk also smaller, okay, and reward is bigger. If market goes up, look at this, you entered here and you can enter profit somewhere here, right? So small risk, bigger reward. As you negotiate price in any market, in stock market also you need to negotiate the price. You know that when we go to buy something, suppose we go to vegetable market and we want to buy some vegetable, and that vendor will tell you that 25 rupees kg for this vegetable. We try to bargain, we try to negotiate the price, right? We'll ask for the give me at 15 rupees, give me at 20 rupees. We will not immediately buy whatever the vendor tell you, right? Whether you want to buy vegetable or it can be anything you want to buy in the market. Every time we bargain it so that we can buy at the lesser price so that we can save some money, right? But in trading, we don't do that. In trading, we don't negotiate the price. Whatever the price we see on the chart, whatever the price we see on the screen, we just go and buy it without even negotiating. That is why in trading also, you need to negotiate the price. If some stock is trading, suppose you see that some stock is trading at 210 rupees, then you should say, no, 210 is expensive for me. No, give me at 200. I want to buy the stock at 200. 210 is expensive for me. Give me at 200. That is how you should negotiate the price in the market. Don't just go and buy it because you are seeing 210 rupees, right? That is what I said. You need to negotiate the price and enter at the best price. For that, I am going to show you something called entry techniques in swing trading. I'll tell you how you can enter at the best price, how you can negotiate the price, and how you can enter at the discounted price. On uptrend, buying at discount, and in downtrend, selling at premium can help in getting the right trade at the right location. What I mean by buying at the discount and selling at the premium, that means you want to buy something for you go to the market, then you always look for the shop which have a discount or a sale, right? Some shops put sales offer. They will put that 30% off, 40% off, 50% off. That is what we get attracted when we see that there is a sale is going on, there is a discount is going on, right? That is what we do it. In trading also, you should buy at the discount, okay? If market is going up like this, in the strong uptrend, discount is this. This is the discount. If you buy here, this is the discount. If you buy here, this is the discount. That is what known as buying at the discount. If you are buying here, then you are not buying at the discount. You are buying at the full price, right? This is what known as discount. That means in the strong uptrend only, you can get the better price, and that should be your goal. Buy at the discount. And in downtrend, sell at the premium. That means if you see something in the strong downtrend, then you know you should not sell here. You should not sell here. You should sell here. This is known as selling at the premium. Okay. So don't just go and short here. Short at the premium. That is what known as buying at discount in uptrend, selling at premium in downtrend. It can help in getting the right trade at the right location. Better entries mean it is better profit potential and lesser risk, right? That's what I said. If something is going in strong uptrend and you identify this is the value area, this is the value area, this is the value area. If you buy here, if you keep a stop loss here, you're keeping stop loss at the right location, below that support, below that value area, and your risk is smaller, right? Instead of buying here and keeping your stop loss, look at this. The risk is smaller. That is why I say in trading, you should aim for losing small money if your trade goes wrong. Because there is no way 100% of the time your trade always works. Trading is a probability. Even the best to best setup also can fail. But trading is all about losing small amount when you are wrong. How you can do that? How you can lose a small amount whenever you are wrong? Entering at the better location, entering at the right location. Okay. Having a better entries can give you better profit potential. Better entries mean better profit potential. If you enter at the right location near the value area, and if you keep your stop loss here, look at this. This is only your stop loss, but that trade works. Look at this. You can make good profit, right? That is why entering at the right location is important. Waiting to enter right location needs patience and discipline. That is one of the problem with novice traders, because they don't have discipline, neither they have patience. They just want to enter into trade without even thinking twice, because they think that if I don't enter, then it will leave me and go. I'll miss the opportunity. So never think like that. There are hundreds of stocks available. Already I told you that there are so many stocks opportunity are there in the market, right? You don't have to worry about only one or two stocks. So many stocks available. So in that case, have that patience and discipline. Okay, that is why traders should have patience and discipline. For example, if you have identified this stock has been strong uptrend, and when you identified this stock was trading here. Okay, the day I identified that this stock is in the strong uptrend, it's trading here. What you will do? Identify where is the right location. You have identified right location is here, right? Then patiently wait for price to come to the right location and then enter. This is what about the locations. One of the very, very important. Okay, that is what, whether I am doing day trading or swing trading, one of the thing always I give more importance to is this. This is what the most important in trading, locations or value area. Now, just to recap what we discussed in the beginning of this course, there are 4 market stages, right? Accumulation, uptrend, distribution, downtrend. So to become a good swing trader, what you need to see that stock is in the which stage, 1, 2, 3, 4. Okay, identify the stage, then look for this value area or location. That is what you need in swing trading. First identify it's in stage 1, 2, 3 or 4. Then you should identify the right location, right value area. That is how you should take the trades in swing trading. I said buy at the discount, sell at the premium. What I mean by that, discount and premium in market. Discount, buying a discounted price in a strong uptrend. Okay, when it is an uptrend, you should focus to buy a discounted price. You should buy cheaper than market value. Don't just buy it whatever you see on screen. Buy cheaper than market value. Have that patience to come to the market, to come to the value area, right location. Don't chase a move, let it come to you. Liquidate long position at a premium. You buy at the discount, but you should sell at the premium. That means you've seen this uptrend and you have identified value area and your order got filled here, right? You patiently waited and your order got filled. Now this is where you should sell. This is what I said at the top, right? Premium. You bought at the discount, you sold at premium. You bought at discount, you sell at premium. You buy at the discount, but sell at the premium. Just like any business, if you are running a small shop, any item you buy at the wholesale price, right? You buy at 100 rupees, try to sell at 150, 160, whatever the price. You keep your margin and you sell it. That is what you are selling at premium. Any items you buy at the wholesale price and you sell at the retail price. That is at the premium. In trading also you should buy at the discounted price and sell at the premium. In downtrend you have to sell at the premium. Okay, downtrend mean like this. In the downtrend you sell at the premium. In the uptrend you buy at the discount, right? Sell expensive than market value. Okay, that means premium. You should sell at expensive than market value. Don't chase a move, let it come to you. That is what I discussed. You should never chase. If you think it is not at the value area, then let it come to the value area. Then you enter. Liquidate short position at a discount. Negotiating the best entry in trading. For this entry technique only, I made a separate topic here in the swing trading course. You see that only to discuss about the technique, I made a separate topic. Why? Because it is very important also to know the entry techniques in trading, where to enter, right? Because I said you should always look for the discount. You should always have a better entry, because if you buy at the discount, then you are getting better price than market value. There are 3 types of entry you will see in the market: ambush entry, retest entry, conventional entry. Conventional entry, remember, it's a safe method and many people already know the conventional entry, but still I'll discuss that conventional entry. But this two entry, I'm sure many people may not be aware of it. What is ambush entry? What is the retest entry? What is ambush entry? Let me discuss first. Ambush entry is like this. Suppose you have seen that, okay, some stocks in the sideways market. Remember, it generally works well at strong support resistance. Ambush entry, normally I prefer when it is in the strong sideways market. Okay, that means you see that some stocks after a uptrend came and made a accumulation stage. Okay, accumulation, and you seen that 2-3 times it came, made bounce from exactly this level, right? You see that couple of times already, you seen that it already bounced from that level. So what you will come to know, you come to know that, oh, this is a support, looks like this is a strong support, because 3 times it came and bounced from that area. Ambush entry mean next time when price comes back to that support, you will not even wait for candle confirmation. You will just go and buy here. You will go and just buy right at that support where 3 times market reversed. I am just giving example as 3 times, okay? Not that every time you have to wait for 3 times, nothing like that. If you see 2 times or more, that level has been acted as a support. That means you should know that that is like a support. But doesn't mean that it's 100% every time it bounces, sometime it can break. But just for this understanding, I'm telling what is ambush entry. Ambush entry means you will just enter here at this line, support line. You will not even wait for candle close confirmation. That means even though there is a red candle at this place, you will just enter it. And maybe you'll keep your stop loss here. And you'll take profit maybe here, back to this resistance. That is what ambush entry. How it is useful? This is risky entry, but your stop loss will be very small. So it will give you very good risk reward trades. Very good risk reward. Win rate will be small because your stop loss is very near. But if it works, you can have one of the best risk reward entry. You should do the ambush entry only near the support or resistance. Ambush entry is high risk entry, but very good risk reward entry. Entering right at the support or resistance without even candle confirmation. That's what I said. Once you identified support or resistance, once price comes to this level, you'll just go long. You will not even wait for candle confirmation. Or when it comes near the resistance, you will go short. You will not even wait for candle confirmation, and you'll just keep stop loss. Stop loss is mandatory, okay? Don't just enter without stop loss. One needs to have high confidence to take this entry. Remember, this is something people who have experience in market, for them it will be easier because they already have good confidence because of their experience in market. If you are an experienced swing trader, experience in market, experience in trading, then swing trading may be one of the best option where your risk will be smaller and you can get good risk reward. If a trader very new, he is new to market, new to trading, then it is really not advisable because you are low on confidence. You may not be able to pull the trigger right at the support or resistance. Generally works well at the strong support resistance. Okay. Let us discuss next entry technique now. Retest entry. What is retest entry? Retest entry means, that is what I said, when you see a big candle near the support, okay, maybe you have identified this support area and you have seen a bullish candle from the support area, okay, 2-3 times that support lines worked, market bounced from that support area, and third time or fourth time when you see in bullish candle, now you want to go long. Retest entry means you will not go long here. Okay, you will not go long on this confirmation candle. What you will do, you will draw a line. You will draw a line almost half of that bullish candle. Okay, 50% of that bullish candle, and you say, no, I don't want to buy at market price. I want 50% discount. This is the 50% discount. You put a line, horizontal line, close to 50% of that big bullish candle, and you say, I will buy here. If I'll buy only if it gives me discount. And you know what? Most of the time market can come have a small pullback close to 50% and it can bounce. And what happens? Instead of entering here, you waited, you shown patient discipline and you got 50% discount, right? Suppose this candle high was 200 rupees and this candle low was 195. What is the 50% discount? 197.5, right? That is what the 50%. So instead of buying at the 200 rupees, you bought at 197.5. That means almost half of that candle you bought, right? You say 2.5 on this entry because opted for retest entry and you got the discount, right? That is what known as retest entry in trading. Retest entry trading can enter at the both in the sideways market. Okay, in sideways market also it can work, or it can work also in the trending market. Trending market also you see that when it came to the value area, you see big green candle. Okay, you see a big green candle like this, but you think that, oh, this candle is too big to enter now. What I'll do, let me try for a discount. And you will draw a line almost close to 50%. Instead of entering here, you will wait and see whether it gives a pullback, and then you will enter. Okay, so that is what known as retest entry in trading. This is the medium risk. Ambush entry, I said high risk. This is, I can say, medium risk. Okay, but you need to have patience and discipline to enter. You need to have patience and discipline. Entering at the center of create candlesticks is nothing but a retest entry. But remember, sometime it can happen. Instead of doing the retest entry, it can keep going up, right? And you miss the entry. So that is fine because you can't do anything, right? Go to the next chart where you are seeing the opportunity. Conventional entry. Conventional entry means entering at the candle close. That is what the conventional. That means if you see there is a strong support here. Okay, there is a strong support here. You'll see that. I said retest entry entering somewhere close to 50%. In the conventional entry, you will enter once you get the confirmation candle. Confirmation candle means green, right? That means it's showing bullish. So you will enter here. This is a low risk entry because you are looking at the candle confirmation, right? But only thing is that conventional entry can give you bigger stop loss. That means win rate may be better in when you take the conventional entry, but risk will be this much, right? Because your stop loss has to be below that candle, below that support. So risk will be bigger in conventional entry, but win rate may be better. So what I advise my students when they ask me which is the better, so I tell them one thing. When you see the support, when you see a bullish candle near that support, look at the candle size. If you see huge candle like this near the support, then if you enter here, your stop loss will be bigger. Even though candle is giving you a little bit of confirmation, but stop loss bigger. That time I say maybe you can go for retest entry so that you'll get the better price. And candle is not too big. Candle is medium size. That time I tell them, okay, that time maybe you don't have to wait for the retest entry because already candle is not too big, so your stop loss will not be very big. Maybe you can go for conventional entry. Nothing like right or wrong. All three entries are nothing that I'm saying one is right, another is wrong. All depends on you. You have to decide which entry you want to take. Ambush entry for people who like to take risk, who thinks that it's okay even though my stop loss hits, I am not bothered, but I want good risk reward. For such people, ambush entry would be better because they entered right at the support, and by the time candle closed, already they are in profit because their entry was here, right? By the time conventional entry trader entered here, but ambush entry trader already in profit because he entered here. So these are the three types of entry I am going to discuss in much detail now. Remember one thing, in the second session we are going to discuss strategies and all this. If you are asking me which entry I have shown you, all strategies I have shown you conventional entry, okay? Because I don't know which entry you prefer. That's why I marked conventional entry in my strategies so that you should remember, but not necessary. You have to enter same place where I mentioned in the chart. You can enter retest also close to 50%, or you can take ambush entry also. Now let me show you ambush entry on charts. Look at this. This is HDFC stock. You can see that after some consolidation, finally it started coming down, right? In the month of somewhere in the mid-March, it came down and then it stopped here. Then it made a base. Look at this. First time it came, made a bullish candle. Second time, again bounced. Third time, again bounced. Fourth time, again bounced. So many times it took the support at this level. So what do you think? You think that, oh, this looks to be good support at this level, and you go and mark a horizontal line at that support. Ambush entry means what? Ambush entry means you are entering right at the horizontal line. You will not even wait for candle confirmation. You will not say, I will wait for bullish candle. You will just go and enter here. That is what the ambush entry. Here, look at this. Candle is red, right? But still you will enter here. You will not say that I want confirmation. You will just enter here. So what is the retest entry? Retest entry, I said, entering at the 50% of the candle. Whenever you see 50% of that candle is touched, you can enter there. Okay. But this one I seen most of the time working well when something is in the strong uptrend like this. Can you see that uptrend or something like a downtrend? More than whenever market in sideways, I seen working better in whenever it is in the uptrend or downtrend. But doesn't mean that it can't work in sideways market. It can work in sideways market also. What I'll do, I'll show you this strong uptrend in this stock. This is the JSW Steel. I'll zoom in and I'll show you so that you will understand exactly what is the retest entry. Whatever you are saying, same JSW Steel, that strong uptrend, I have zoomed in so that you can see it much clearer way. Okay, that's why I have zoomed in here. Now look at this. Somewhere around July 27th, you can see that it started a strong uptrend. Look at this. This is the strong uptrend. From, you can see that accumulation stage, it started going in the uptrend. Remember, all these are daily time frame. Okay. Remember, swing trading method, all on daily time frame candlestick, not 1 hour, 2 hour, 4 hour, not smaller time frame. Entry can be smaller time frame. You have to do the analysis only on daily time frame. Analysis you will make it on daily time frame, but entry you can make it in smaller time frame. It can be 5 minutes or 50 minutes. Okay. So remember these things whenever I show you the chart. Look at this from July 27th, strong uptrend, right? Every daily time frame candlestick, you can see big green candle. Now how to enter this? Not entering here. Okay. Not entering here, not entering at the top. Draw a 50% line. You've drawn a 50% line, but you missed it. Here you got the opportunity. Here you got a 50% discount. Here you slightly missed it. Here you missed it. Look at this. Here you got 50% discount. Here you got 50% discount. Here you got 50% discount. Here you missed the 50% discount. Here you got it. Here you didn't get it. Here you got it. Here you got it. Here you got the 50% discount. 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 Here also you got the 50% discount. That is what known as entering at the 50% discount. That means you will draw a line at the 50% of the candlestick and you can enter. And can work well when a stock in strong uptrend move. You see some stocks come with the good news, some good news, right? Something like some pharmaceutical stocks, they come with some FDA, they get some FDA approval, or they get approval to sell their product in some countries. That all the good news for the pharmaceutical stocks, right? And you will see this kind of move. This kind of move generally happens because of some news, positive news. Okay, it keeps going up, making green candle every time, most of the time, not every time. Okay, that is known as market is moving on some news. Then this retest entry works better because whenever it makes such a big bullish candle, no point in entering at the top, put the line, retest entry. Sometimes you may miss, don't worry, here you did not get it, right? Next candle, next day again put the 50% line and you got the entry here. So that is what known as retest entry. Same applies when something in the strong downtrend also. Downtrend also you can apply this retest entry method also. Okay. I have shown you ambush entry, I have shown you retest entry. Now let us see what is the conventional entry. Conventional entry is nothing but entering at the candle confirmation. You have seen candle made a bullish candle near that support. Now you are entering here. All right. That is what the conventional entry. That means you will not enter anywhere here. Once you see bullish candle, now you will enter. That is what the conventional entry in trading. Now in this chart, I shown you all three entries. The black line what you see is the conventional entry. Once your candle closed, you entered. Blue line what I said, retest entry on 50%. And the red line what you see is that is the ambush entry. Ambush entry means entering at the support. And the pink line what you see, that is the stop loss. Why I kept my stop loss here? Because stop loss should be below the wicks. You can see that wicks, right? That is the extreme low wicks. You can keep the stop loss below it. So you can see that stop loss will be smaller in ambush entry, retest entry medium, conventional entry stop loss will be bigger. Now let us go to the smaller time frame. Whatever you have seen here, this is on daily time frame. Okay, this is on daily time frame. Now let us move to the smaller time frame, that is 5 minutes time frame. Look at this. Same stocks. When you go to the 5 minutes time frame, ambush entry was that red line, right? Ambush entry was that red line. That means ambush entry trader will not even look at the bullish or anything. Once he says this red candle also, he will enter and he'll keep his stop loss here, that pink line, expecting market to reverse before hitting the stop loss. Retest entry mean this blue line, you marked it on the chart, right? 27 chart, you have marked this. Next day you will enter. Next day when the price came, touched almost 50% of that candle. What is the 50% here? 50% is low and high. Okay. This is the low of 27th. Where is the high? This is the high, right? Where is the 50% of these two lines? Somewhere close to here. You don't have to mark exactly 50%. You don't have to keep the exact scale and put exactly 50%. Okay, somewhere close to 50% is fine. Not necessary you have to do exactly 50% and all this. Close to 50% is fine. And close to 50% of this 27th high and low is this blue line. And you can see that next day it came, just touched that blue line and it again started bouncing. And your order got filled here at the retest entry. What about the conventional entry? Conventional entry means you look for the confirmation. When you get the confirmation, near market close, right? 9:15 to 3:30 market opens in India. 9:15 to say first 1 hour, first 2 hour, first 3 hour. Very difficult to say how this candle will be on daily time frame, green, red. In the live market, before market closes, it's difficult to say whether this candle is going to become a green or red at the end of the day, right? Sometimes first 1 or 2 hours it may show bullishness and finally at the market close that green candle become red. That can happen when you see the daily time frame. That's why you should wait almost near the candle close. That means almost near the end of the day. 3:30 market close, at least around 3:20, 3:25 market have just 5 minutes, 10 minutes to close. That time you know that big green candle generally it will not reverse everything and becomes red because almost only 5-10 minutes left market to close. So in that case, conventional entry means you will wait close to market close. 3:30 candle is this, the red candle. Maybe 5 minutes before market close at 3:25. At 3:25 candle close, you can enter. Okay, that is what ambush entry mean. There is no time. The moment market opens, whenever price comes near that level, you can just enter near the support. Retest entry mean you will enter next day. So retest entry means you will not enter on 27th. When you will enter next day. 27th, if price comes, touches the 50% of that bullish candle on 27th, you will enter. Conventional entry, what you will do? You will enter on the same day, but you will enter near the close of the market. If 3:30 market is closing, somewhere around 320, 325, you can enter, because you are a swing trader. You don't have to close the position same day, right? You can enter and you can carry forward for next day or next coming day. So that is what I just wanted to show you about the all three entries, how you can take in swing trading. Now we are coming to importance of volumes in trading. Volume, yes, volume also good. It is not that volume you should not look at it, but remember, you can't take a trade purely based on volumes. Okay, you can't look at the volumes and you can take a buy or sell order. Always volume should be combined with the price action. You can trade price action without even plotting volumes on your chart. Just purely based on price action, you can take a trade. But you can't trade just based on volumes. Okay, just based on volumes, you should not trade. Sometimes volume can give you some signals. Okay, volume can tell you something on your chart. That is what we are going to see in this topic, importance of volumes in trading. Volume is one of the valuable key to analyzing price breakouts and reversals. Generally, volumes are important at the breakouts and reversal. Okay, so that is what you should remember. Trades can't be taken purely on volume. It needs to be combined with price action. That's what I just said, right? Volumes you can't trade based on volumes. It needs to be combined with price action. There are three types of volumes. One is novice volume. Second is pro volume. Third is continuation volume. So we'll see in much detail what is novice, what is pro, what is novice volume, what is pro volume, what is continuation volume. Novice volume generally ends the current move. So novice volumes generally end of the current move. That means many times you'll see like this in the strong downtrend. Okay, strong downtrend happening in the market, and you see that when you look at the volumes chart, okay, volumes will be like this, like this, like this. And once you see one volume like this, what is this volume? You can see spike. Can you see that this spike, huge volumes, right? Generally it's a novice volume. That means this is a trap. This volume is not that, oh, big volume. That means now market will go down. No, this mostly it's the end of that down move. That is what known as novice volume, because many novice trader goes and short here looking at this huge volumes without even knowing that is a novice volume. Okay, it's mostly end of this move. Whenever you see this kind of big spike after a big downtrend or an uptrend, most of the time, not all the time, you will see market after that going in sideways, or you can see that market suddenly bounces from that level. Okay, it's not a place to go short after a big downtrend or uptrend. Pro volume ignites a brand new move. Pro volumes, what is pro? Professionals volumes. That means when you see pro volumes, most of the time it is going to start a new trend. Suppose market came down and started an accumulation stage. Okay, it's making a huge accumulation stage over the long period of time, and you can say that it had a kind of cluster of volumes. Okay, cluster of volumes during the accumulation stage, and after few days, after the big accumulation here, right, one fine day comes and makes a bullish candle. What is this? Breakout from the accumulation stage. And if you see huge volumes, okay, you will see a huge spikes whenever breakout happens. Most of the time it starts going up. Most of the time it's a real breakout because of huge volumes. That means what I said, huge volumes after a strong downtrend or after a strong uptrend, that is most of the time trap. That is a novice volumes. Professional volume, pro volumes mean after a strong sideways market, suddenly breakout happens and you see big volumes. That means it's a pro volumes. That means breakout happened and it's a pro volume. I'll show you on the chart that is also. What about the continuation volume? Continuation volume leads to continuation of current move. Suppose you see that strong uptrend, okay, and you see that same kind of volume, same mean not exact, means same kind of average volumes. Okay, there is no spikes or anything like that. That means it is more likely continuation. Okay, it's more likely continuation. When you see this kind of cluster of volumes without any big spikes. Okay, these are the three volumes I said: novice volume, pro volume, continuation volume. Novice volume, above average volume after a strong uptrend or downtrend, more likely novice volume, and trend likely to end or sideways. That's what I said, right? After a strong downtrend, if you see a big volumes, most of the time it is not going to go down, it is going to stay sideways, or it may make a U-turn. Suddenly it may start bouncing. This is also known as volume climax. Okay, climax means what? That trend more likely over. You should not buy here. Market may be now next going in sideways. If you see a big downtrend and a huge volume, don't short here, because it is likely to go sideways or make a U-turn. That means suddenly it can start going up. But remember what I said, never trade based on volumes. It should be combined with price action. Pro volume, I said, above average volume after a long sideways market, more likely start of a new trend by smart money. That is what most of the time pro volumes you will see in accumulation or a distribution stage. Okay, near the accumulation or a distribution stage, if you see breakout happens with a big volumes, most of the time smart money decided to take market up or market down, right? So that is what pro volumes after a sideways market, most of the time important. Continuation volume, I said, it is typically it leads to continuation of current move. If you see a strong uptrend or a downtrend and you see volume, there is no much difference, almost same kind of volume throughout the move. That means it is continuation of current move of that stock. This is the Bajaj stock, and you can see that after a strong distribution stage, it made a big crash. When you look at the chart, can you see which is the biggest volume? This is the biggest volume, right? Huge, right? Compared to any candlestick on the left. And it's already in the strong downtrend. This is not a place to short. Don't short that candle thinking that, oh, this volume is a too big volume, too huge volume bar. Now I'll short. That is the most likely end of that move. That is what known as novice volume, volume climax or selling climax. That is not a place to short. And that is what exactly happened. After that, it went into the strong sideways market. This is the pro volume. Look at this. Right? This is what I discussed in the earlier chart. Same one. Strong accumulation stage for a almost like mid-March till almost till mid-June. Then breakout with a strong bullish candle. And what is the continuation volume? Continuation volume is like this. Right? It's in the strong uptrend. And you can see that there is no abnormal volume. You can see that almost same kind of volumes. Right? There is no big spikes like this. That is what continuation volume in trading. Continuation volume generally leads to continuation of that move. Volumes can't tell you 100%. It is not as supportive as price action. Price action, sometimes you can take best entries just looking at the candlestick pattern, just looking at the value area, just looking at the location. Without even plotting volumes on your chart, still you can take better trade. But again, I am repeating, volumes you can have on your chart, but you should combine with a price action.